Hey, I'd like to welcome you to another episode of Mission Matters Money, your source for all things money. My name is Adam Torres. You can follow me on Instagram at AskAdamTorres. Keep up with my book releases, book tour schedule, signings, all that other good stuff. Always love to connect with you there. And as always, if you'd like to apply to become a co-author of one of my upcoming books, just head on over to the website, missionmatters.com, and click on Become an Author to apply. All right, so today I have Mike Vann on the line, and he's principal and co-founder over at Trident Multifamily. Mike, welcome to the show.
Thanks, Adam. Appreciate you having me on the show today.
All right, so excited to get into today's topic. So we're going to talk about the benefits of multifamily real estate investing. But before we do that, let's get a little bit further into what you're doing over at Trident Multifamily. Tell us a little bit more about the company, please.
So Trident Multifamily is basically we help busy professionals invest in large multifamily apartment buildings and provide tax-advantaged passive income to those individuals. Most people know that real estate is a great asset class to be invested in, but don't have the time or the energy to do it themselves. So we provide that opportunity for them.
I think that's a great transition. So let's get into it. So the benefits of multifamily real estate investing. I mean, where do you want to begin with this one?
Wow, where to begin at a time like this? This is an unprecedented time like we've ever seen it before in history, but once again shows unique advantages to investing in multifamily real estate versus, say, the stock market. We have the stock market being so volatile, lost more than 30% of its value just since the first of the year. And multifamily real estate, specifically the large apartment buildings that we invest in, historically have shown more consistent and higher overall returns in the stock market. Not to mention, during downtimes such as these, tend to be more stable. And this is all data that's backed up historically. If you look at the trends over the last several decades.
And so what are some of the, let's talk a little bit more about your niche in multifamily and what you're working on. So you mentioned you're doing large commercial, yes? Tell us a little bit more about that.
So what we do, we look for 100-plus unit, what we call B and C class, kind of workforce housing type of apartment communities, where we look specifically for communities that are underperforming, may have some deferred maintenance, rents are 10 to 15% under market. And we go in, we pool a group of investors through what we call a syndication, which is basically where you pool groups of investors together, busy professionals, people who are working that don't have time to do this themselves but want to invest in real estate. And we pool these groups of investors together. We go out and buy a large apartment building, 100-plus, 200-plus unit apartment building. And these are in good, solid markets where the fundamentals of income and job growth are strong. We look for performing assets that are already cash flowing, and we look to improve the performance of those businesses, either through cutting expenses, improving operational efficiencies, utility conservation measures, and injecting a lot of capital into the rehab of the interiors and exteriors of the apartment buildings, increasing occupancy, and being able to increase rents because we've improved the overall asset itself. What that does, it increases the net operating income of the business and therefore the value of the property itself. And then we also provide quarterly distributions to our investors throughout the life of the project, which is typically underwritten on a 5-year pro forma.
Let's talk a little bit more about the syndication piece, because I don't want to assume that everybody listening has ever taken part in one or understands that completely. Talk a little bit more about syndication, please.
Okay, so the Obama administration passed a law that basically allowed people from Main Street to invest in asset classes like large commercial real estate that has typically only been reserved for institutional investors. So through a syndication model, we can take and pool a group of 20, 30, 40 investors, depending on the size of the project, and everybody invests and buys fractional ownership in this apartment building. It's not a REIT. You're not buying a stock. You actually have fractional ownership in that apartment building. These are done on an asset-by-asset basis, so each individual apartment community is its own ownership entity. You're buying a fractional ownership of that entity. And so say our typical investment is $50,000. So you can invest your $50,000. We underwrite fairly conservatively, and so what we look at on a 5-year pro forma for a project to be viable for us is to be able to provide an 80% return over that 5-year time horizon. 80% return breaks down to 16% annualized return. Of that 16%, we want at least half of that to come in cash flow from operations of the property. So you're going to get over that 5 years, 8% a year return over the 5 years. And then once we refinance and return capital to the investors, or we sell the property, you get the other half of the projected return through that sale or that capital event that happens at that time. The great thing about real estate in general is most people know tax advantages. So another law that was passed by the Trump administration during the new tax law allowed you to do accelerated depreciation. And so what that does, without getting too deep in the weeds, it essentially lets you have a paper loss to shelter that income that you get through cash flow over the 5-year pro forma.
And so, Mike, that being said, if somebody is thinking about, let's talk about the diversification in overall portfolio, because I feel like that's one of the things that, when this took place and when people were allowed to participate now in syndications and things like that, maybe they thought that, REITs were the only way to get that exposure in their portfolio, but that's still, supply and demand thing, right? So that's still easily liquid, and it functions differently, when we're going through something like we're going through now. So let's talk about how real estate can diversify a portfolio.
Well, real estate is considered a hard asset. Unlike the stock market, even a REIT, even though it's a real estate investment trust, is still a stock and a paper asset. The syndication model and the specific model that we provide is you're investing in a hard asset. You're actually buying, like I said before, a fractional ownership of that building. And so as far as diversification, if you look at the historical performance of multifamily real estate in particular, during downtimes, performance really doesn't suffer. It actually rents can actually even increase. And so that's why you see it having such a strong performance throughout the history, in good times and in bad. And so being able to deliver, solid cash flow, regardless of what's going on in the economy, it provides a little bit more diversity, or actually offers a better opportunity than a lot of the paper assets that you invest in historically through your 401ks and so forth.
So, Mike, if somebody's listening to this and they want more information on Trident Multifamily or to connect with you, what's the best way for them to reach out?
You can go to our website, which is tridentmultifamily.com. We're on Facebook. You can email us at info@tridentmultifamily.com, and we'll be happy to connect with you and give you more information, answer any questions as far as apartment syndications, and how to get information as far as investing in these opportunities in the future. Be happy to talk to anyone anytime.
Awesome, Mike. Well, hey, great having you on the show today. Appreciate you coming on. Tell us a little bit more about what you're doing over at Trident Multifamily, and also outlining some of the benefits of investing in multifamily real estate. So great stuff there. And to the audience, as always, thank you for tuning in. Hope you got a lot of value out of this. Hope you learned a lot. If you did, don't forget, subscribe to the podcast. Leave me a review in the Apple iTunes store. If you're watching this on our YouTube channel, Mission Matters Money, definitely give us a subscribe there, but also leave us some comments in the comment section. information. Love to know what kind of projects and things you're working on. And Mike, thanks again for coming on the show.